In this country, we are facing a mortgage time bomb. The clock is ticking away and time is running out. A recent Daily Mail report showed that thousands of people are going to see the highest ever increase in their mortgage rates. In fact, for many people, it's going to be a case of doubling the payments they're making towards their interest each month. Hey, if you're watching my videos for the first time, my name is Saj Hussain, and on this channel I share with you my 15 plus years of property investing experience to ultimately help you get further faster in your own property investing business. So what's going on with interest rates right now? During March 2020 to December 2021, the Bank of England base rate was 0.1%. This is the lowest it's ever been since records began more than 300 years ago. Now, the purpose of this was to try and protect the economy during the coronavirus outbreak, really to protect the economy from collapsing. Now, anybody that took a fixed term mortgage during that period clearly have benefited from the low rates. However, during the last 12 months, things have changed dramatically. Interest rates have increased significantly a number of times, now standing at 3%. And what that means for many people, that their mortgage payments, the payments that they make towards their interest, will probably double. Now, the Lib Dems have done some research on this, looking at somebody with an average mortgage of say £236,000, their payments will increase quite significantly, and so they'll have to pay an extra £2,581 a year in interest payments versus what they were paying before. Now, many people that are struggling to make ends meet, they are really not going to be able to maintain or service that extra level of debt payments they're going to have to make. About 170,000 people have come off their fixed rate mortgage product at the end of November, and according to the Liberal Democrats research, about another 3,300 are coming off their fixed rates each and every day. Now, the new rate they go on to, known as the standard variable rate, will be the one that many people will struggle to afford to pay because it'll be significantly more than they were probably paying previously. For many people, when they take out a new mortgage product, they'll generally fix it for a period of time. That might be anything, say, between 2 and 5 years. And they'll either fix it because they want a fixed amount of payment that they want to make each and every month, or it may be they've got some kind of discounted product which is lower than the regular rate. But when these fixed period products finish, or the discounted period finishes, or some people don't call them the honeymoon period, once that's over, they'll go on to the bank's standard rate, which is known as the standard variable rate. And as these fixed rate mortgage products are now coming to an end and they're going on to these standard variable rates, they are now much higher. Now, sometimes what people will do is they look to get to the end of a fixed rate period and they remortgage onto a different mortgage product in order really to fix it again for another period of time, maybe another 3 years or 5 years. However, when they're looking to do that right now, the rates are now significantly higher than they were before. So either way, they are much higher. In some cases, for those that are, say, buy-to-let landlords, they've got the additional problem when they're looking to now remortgage and maybe go to another provider to try and get a lower rate, that the challenge is because the rates have gone up, there's also the affordability factor to build into the equation, i.e. how much is the mortgage payments lower than the rent payment, i.e. the rent payment needs to be significantly more, 25 to 45% more than the mortgage payment in order for the lender to be able to approve the mortgage. Now, if the rates have gone up, what that generally means is that the actual amount of money that somebody can borrow on a buy-to-let mortgage is lower. So if they're looking to do that, i.e. a buy-to-let landlord moving to another provider, they've got now the additional challenge that they may not be able to borrow enough money to even be able to clear the existing mortgage and effectively get trapped in the current mortgage at a higher rate. This has also fueled the fears that repossession will be on the rise, with more and more people not being able to pay their mortgages. And this is something that hasn't happened for quite a long time. Now, the Office of Budget Responsibility, their forecast that the rates will probably peak at about 5% at the end of 2024. They're basing this that the Bank of England's base rate will also peak at around the 5% figure around 2023 and 2024 as well, and then allow mortgage rates to settle. However, new mortgage products for many people are currently above the 5% rate, and the last time it was at that sort of level was about 2008. However, there is some good news. The mortgage market is starting to set a little bit, and we're starting to find that the cost of some of those mortgage products is now starting to fall. If you're in the unfortunate position right now where your mortgage product is coming to an end over the next few weeks and months, the important thing is that you're planning ahead, so you know what's going to happen in terms of how it's going to affect the cost, the amount of money that you need to pay each month to service that mortgage. One of the best things to do is to sit down with an independent mortgage broker, somebody that services the whole of the market, that can really scan the market and look at what's going to be the best products right now available to you. So if you did switch to somebody else, what is the options open to you, and what's going to be the cost of that mortgage, versus staying on the current mortgage that you're already on when it comes off the fixed rate period, what that rate is going to rise to and how much is it that you need to pay. One of the fallouts from the hike in the recent interest rates will be the house price will start to fall. The Office of Budget Responsibility have done some further modelling on the data currently available, and they're looking at house prices will fall over the next 2 years by about 9%. Personally, I think the market will probably fall a little bit more than that, maybe 10 to 15% in terms of how house prices might change based on what's going on in the market right now. And these things can change very quickly by the government pulling one of its levers as it does in terms of its influence over the property market. However, what this does mean for the savvy property investor, landlord, or developer is that we'll have a 2 year window of opportunity in order to be able to profit from property. The thing is, the strategies and techniques that we've been using over the last few years are not necessarily going to be the ones that you'll need to use over the next 2 years to really be able to capitalize on the opportunities that are going to exist. One of the techniques that we'll really be doubling down on over the next 2 years is that of controlling property rather than just going out and purchasing it. Now, it doesn't mean we won't be buying any property, we definitely will be buying, but we'll also be using control techniques such as options, lease options, assisted sale, these type of methods where you can control a property and also control its longer term profit that you might be able to gain from that property. The last time we were using these strategies really well was more than 10 years ago. I know some people have been teaching these strategies over the last few years, but really it's not been the right time because the market conditions haven't been right. But now we're facing the perfect market conditions to be able to use these strategies. And if you want to learn more about this, make sure you ping me a message on any of my social media because we'll be running some training in a few weeks' time and I can let you know more about that. Hey, look, if you've enjoyed this video, then make sure you do me a favor by click on my face over here to subscribe to the channel. Then once you've done that, make sure you come and watch this video over here, which talks more about the strategies I mentioned about controlling property and how to really profit from property without even purchasing property. So look forward to seeing you on this video next.